It is official. We're the first ones to have reported this. Diageo has launched, like I said, an open offer for 26% of United Spirits. If subscribed fully, Diageo's stake in United Spirits will rise from the current 28.7% to 58.7%. How will this offer impact United Spirits going ahead? And what happens if the offer is not subscribed in full or if it is oversubscribed? But more importantly, what should investors in United Spirits do? We're going to talk to a long-time investor. Ramesh Damani joins us to analyze or answer all of these questions. Good afternoon to you, Ramesh. Thank you very much for speaking with us. Most of the brokerage reports out today seem to indicate that this is an attractive exit price. What would you say about the price as well as any potential for exit for you?
Well, good afternoon, Monica. I'd preface my comments first by saying that I am a holder of United Spirits, so I have a vested interest in whatever I'm speaking. Having said that, I think you're right. It's a very attractive offer, 20% premium. And just remember, maybe 12, 15 months ago, they had paid the promoters and the older shareholders maybe around 1,400, 1,500 rupees per share. So they practically doubled the price in a year's time. So yes, it's attractive. But, Monica, my personal view is that one of the things that is driving this bull market is the severe under-ownership of equities by Indians themselves. Even in case of United Spirits, almost 40% of the free float is held by foreigners. So I think my sense is they're also getting into a period where the United Spirits stock has gone into Nifty, and also that I think June, July will be a buoyant period for the market, considering election results would have been out for about 30, 40 days. So my sense is they will have a hard time meeting the 26% target.
Fair enough. The first offer, I think, managed to attract just about 0.5% in terms of subscription, but that could probably be put down to that very low price of, I think, 14.40 in the first offer. Ramesh, do you think that at this price, and it's a really attractive price, they're maybe overvaluing the stock? How would you describe the way they've looked at this stock at 3,030? They've clearly said, or Diageo has said, that they want certainty of control, which is probably why they're happy to pay this premium. But is this a price that could sustain?
Well, you have to understand between the time they've launched the offer and this time, the rupee has also depreciated favorably for them against the pound. Interest rates remain low in Western economies, and Diageo is searching for growth. So, for them, it makes eminent sense. My problem here is that there is some thought process here that we are entering the early stages of a new bull market in India. If that happens to be the case, you don't necessarily want to sell the great high-quality businesses that you own in your portfolio just because the market at some point of time is perhaps overvaluing the stock. I'll take you back to the example of Lever, for example. Lever made an offer, it was undersubscribed, and the price today is a bit higher than the price that they offered. So a lot of these stocks will remain expensive for time to come. They're unlikely to become cheaper.
So, Ramesh, hi, afternoon. So, are you giving us a hint that you won't be subscribing in the tender open offer?
He already said so, not a hint. He said so, I think, very clearly.
Yeah, I did. It's difficult to say what I may or may not do finally. I'm not want to make a prediction on air what I will do. But my thesis is that this market is going to pay a premium for high-quality businesses in which Indian retail public has very minimal ownership.
Sure.
And I think that is playing out in any number of stocks in the current few months, in the last few months.
Okay. Ramesh, in the past, you have always done this analysis of how some of these businesses trade globally, given the size of a business of United Spirits in India and how relative stocks trade worldwide globally. Given that, do you think United Spirits is still undervalued? And what do you think would be a fair value for a stock like this?
That's a difficult question to answer. You must remember I bought this stock in 2004 when it was trading at a market cap of 250 crores, 300 crores. So, that was what we call severe undervaluation and a deep discount to its valuation. Of course, it's no longer, cheap as you will expect. But with Diageo coming in there and with great management in place and the ability to, scale up, bring new brands into the portfolio, it's difficult to say. I mean, it's probably trades closer to 70, 80 times earnings right now. So it's certainly by no conventional yardstick cheap. But there is a deficit of high-quality businesses that are in the public sphere in India. And that itself means that these great businesses that work in good times, bad times, happy times, dreadful times, get a premium.
You know, Ramesh, you've made all the arguments for why you would prefer to stay invested in this stock if that's your final decision. But I have to put that big legal question to you, right? There is the legal overhang, over Diageo's initial acquisition and entry into this company. And who knows? I mean, one court bench has already said that that acquisition should be stayed. It's null and void, and the case is now in the Supreme Court. I'm not asking you for how this will transpire legally. None of us can predict how a court decides. But it is a sword hanging over this stock, and it could potentially disturb Diageo's ability to, increase their control of this company and therefore do all the good things that many of you investors expect it will do for USL. How do you assess that risk?
You know, it is a sword. It is a sword. But as you correctly say, that it is a risk when you own the stock. But, these things, unfortunately, take place, whether it's, the recent Microsoft tax negotiations going on, or Vodafone going on, or the recent...
Ramesh, if I may interrupt you there, sorry to interrupt you, but those are tax issues. A negative decision in the Supreme Court could put at peril the very initial acquisition of USL by Diageo. And that would sort of, throw a very bizarre spanner in the works when it comes to being able to understand how much control Diageo would have on USL. So therefore, I'm asking you, this is a fairly unquantified risk. It's not a risk like a tax situation or something like that.
Yeah, it is. I agree with you, but, I have no better answer than you have at this point, other than the fact that any new government would want to encourage foreign investment, and they want to encourage, we need FDI. Our current account points to the need of FDI coming in large chunks in India. So, we hope for the best. I don't have an answer for that. I don't think anybody does.
But would that mean that you're not, for you at least, this legal risk is not as big a hindrance, to continue ownership of the stock?
Things have a way of sorting themselves out in India. They take time, Menaka, but these things tend to sort themselves out. You don't want to send a message that Indian companies can go and acquire a company like Chorus, so we can go and acquire companies overseas, but foreigners can't invest in Indian companies. That would send a very negative signal for the investment climate. I don't think any government can afford to do that. So it will get straightened out. Perhaps not in the next 3 months, but it probably gets straightened out.
So, Ramesh, if the open offer is not fully subscribed, and as you said, there's a good chance that it does not, in that case, do you think Diageo will show its intent once again, maybe a year down the line with maybe another follow-on offer?
What Anuj is saying is, should investors hold out for a better price a few months down the line?
I don't think so. I don't think they would give a higher price in the immediate term. But what they will, today it's trading almost 5 to 7 or 10% below the offer price that they're giving. So there represents a sizable arbitrage opportunity for investors who believe that the offer will be undersubscribed. So you do get an arbitrage opportunity even as I speak to you today.
Okay, Ramesh, final question from my end. In the past, you've spoken about these holding companies as well, McDowell Holdings, UB Holdings. Do you think even they warrant a look at current levels?
That one I'm not that sure about anymore because, there's in UB Holding, which is the parent company of all these companies, is involved in a huge bunch of legal issues. So I'm not sure they're very cheap. They're trading only at a fraction of their asset values. But there's a cloud over the management, a cloud over the future of these companies. So it's probably better to look at the operating business rather than the holding business.
It's very interesting you say that, Ramesh, because the same cloud actually hangs over Diageo's control of USL. It all goes back to UBHL's earlier stake sale and then the preferential allotment, etc. So if you're saying that cloud is not, good enough for you to want to look at UBHL positively, it's still not a big deal when it comes to USL, is it?
Well, see, ownership makes a lot of difference. I think ownership is, 90% of the law. And Diageo already controls and runs this company, right? And they're going to do anything in their power to defend and exercise control, continuing control of these companies. But on the other hand, UB Holding is not owned by Diageo. It is owned by Mr. Malia himself. And he's clearly not interested in running these businesses anymore. So that's the difference, Monica.
All right, fair point. Ramesh, thank you so much for joining us and sharing with us your perspective on how to react or respond to this current open offer.